Hello and welcome back to ASX Market Watch. Thanks so much for joining me. It's really great to have you watching. And this week we're actually looking at three different charts, the ASX Top 200, the Dow Jones and the FTSE. So we're just getting a whole wide encompassment of the world indices there, at least through the Western world. And the first one I'm looking at is the ASX Top 200. Really simple analysis on this one. The first thing I've done is just drawn in my downtrend line. This was the one that was crossed in March 2009. Gave us this bull run that went for about 6 to 9 months. You also had a flatter trend line here, which was crossed in July 2009. That gave us a bit of a bull run from there as well, about 6 months left. So you had those two entry signals there in 2009. Really simple entry signals, guys. I mean, anyone could use trend lines. They're just a really simple tool to use. And what we've actually had recently is the market has crossed down below the uptrend line. Now, that gave us a bit of a correction, but since then, what I was looking for this week was a higher peak and a higher trough. And that's actually exactly what happened this week. So that's, as I said last week, I was looking for that to cement the upward momentum. So basically, I consider the market to be in a short-term uptrend at the moment. Now, because it's done that, what I can do as well is flatten our uptrend line. So what that means is that this will provide support for the prices in the future. So trend lines are actually a great way of gauging support, where the market might find support in the future. What that means for this particular indice, the ASX Top 200, is we're in an upward market on the short term and the long term sort of time frames at the moment as well. And if we were to see a reversal, it would have to trade through the uptrend line and then through the previous trough. So that currently is at 4,600. So basically, as far as my analysis is concerned, we're looking at an uptrend in the ASX Top 200, and it wouldn't be considered a downtrend until the price went down through 4,600. Really simple. And one other thing with the ASX Top 200 at the moment, guys, is it looks as though it's forming a continuation pattern. So it's basically in a bit of a sideways movement for around 6 months, and what that could be is a continuation pattern where the price will continue up from here to around that 5,200 level that we were speaking about last year, and that's where I was hoping the market was going to go to. It tried, but then it failed, and now it's going to try again. The only thing standing in its way is the resistance at 5,000. So that's right here, and it's basically coming up for another test of 5,000 at the moment. So look out for that. Once it passes that resistance, if it can, and if it comes back and sort of rests on top of the 5,000 level, then happy days, it'll probably continue. So really simple analysis. It's only drawing lines on a chart, and yet it can be extremely useful. The next one is the Dow Jones Industrial Average. Again, trend lines. All we have is the uptrend line here. Same thing with the Dow Jones. Using our uptrend line, as you can see, we've just got the two troughs here at the moment. Now, some people would not call that a valid trend line, but look, I'm not a fussy person in my trading. I don't need it to do any magical flips or backflips or special formulas. Really, all I need is enough troughs to make a trend line. 2 is enough for me. If the market goes down below this trend line and then down below the previous trough, we're looking at about 10,100 at the moment, about 10,150 for the Dow Jones. Currently, the Dow Jones is considered to be in an uptrend as well, because we're having higher peaks, higher troughs, and it's still trading above our uptrend line. The other thing with that is, if I could just get it, here we go, the longer term downtrend line. As you can see, this has gone for about 2 years at the moment, about 2.5 years. Longer term downtrend line, we did find that the market sort of snaked around it for a few months, and now it's taken off again. So because it's trading above that as well, if I can just increase that, because it's trading above that downtrend line, that's basically letting us know that prices are very bullish on the Dow Jones as well. So again, very, very simple stuff. The last one we're looking at is the FTSE, and guess what? Trend lines is what I'm going to draw. Oh my gosh, surprise, surprise. Oh man, guys, this is so simple. Really, this is simple stuff. But in all honesty, it really just does work wonders. Downtrend line, this is the longer term downtrend line. As you can see, price found a lot of it also just really snaked around the downtrend line, the longer term downtrend line, as price usually will. See, it was resisting there, then it traded above it, it became support, then it's gone up, down, just support and resistance around this longer term downtrend line. Currently, it's trading above both of these lines. A couple of weeks ago, we called that it was time for some more bullish action on the FTSE. That's exactly what's happened. One last thing is this single bar, the last bar on Friday on the FTSE. This is what a lot of people, if you've studied candlestick analysis or single bar reversals, then this bar is what some people might call a hanging man. Oh no, is it a hanging man? No, shooting star. Sorry, my apologies. Look, I really don't mind what people call it, but basically the idea behind this bar is it's started low, it's gone all the way up during the day, and then it's closed low as well. So whatever it is you call it, what that means is we've started low, we've gone up, but then sellers have come back in to push the prices down. Now this single bar by itself has the power to reverse the market. I don't personally use them to trade. I know a lot of people who do, and they've been extremely successful. What they do is they actually put the entry at the bottom of the bar and their stop loss at the top of the bar, and then they only risk an appropriate amount, of course. Personally, I don't use those, but I know, as I said, a lot of people who do, and look, they absolutely love these things. The other part of this this scenario is that this single bar has had the most volume of any day in the last 2 years. So what that means is there were a hell of a lot of buyers or sellers. It really doesn't matter which one. I mean, obviously both, because you need two people to make a market. But there was a lot of volume, a lot of trading going on, and with that trading, it's pushed it back down to close on its lows. So basically that means that sellers won the day. That again is really simple stuff, guys. I hope that helps just on the single bar analysis. Even with your entries and exits, I mean, really simple stuff. Personally, I would still look at the trend lines, so I'd be expecting the market to quite possibly have a bit of support at that little short-term trend line there. But that's just me. I could be wrong. Other people would prefer to use that that single bar or that candlestick. The shooting star, if you will. So, thanks very much for joining me, guys. That's like heaps of different ways to look at the market. Of course, the simplest way is still trend lines. But I hope it's helped a little bit. And if it has, please check out the website. It's asxmarketwatch.com. There's a free course on there. I'm actually putting up my trading diary on there as well, just because people have requested it. And really, it's just all the trades that I've been making and the reasons why. And hopefully that people can learn from that. Obviously, I'm not the best trader in the world. And I'm definitely not pretending to be, but it's nice to see the way that another trader might trade. Just using the simple method that I use. So, thanks again, guys. Thanks for joining me, and hopefully I'll see you next week. All right, bye now.